Hi, I'm Shakeen Tawahena, Deputy Editor and Commercial Editor of Mortgage Solutions and Specialist Lending Solutions. In this video debate series, in partnership with Together, we'll explore some of the opportunities to be found in the specialist lending market and how advisors can make the most of these through partnerships across the sector. I'm joined by Nick Parker, Head of Networks and Clubs at Together, Rachel Geddes, Strategic Partnerships Director at Mortgage Advice Bureau, and Andrew Cappaert, Group Head of National Accounts at Brightstar Financial. Thank you all for being part of this discussion. This time around, we will discuss some of the common challenges faced when placing self-employed cases. So, Andrew, I'll start this off with you. What areas of self-employed lending might lenders be missing or overlooking?
I think maybe the initial problem is where lenders will rigidly assess, what's in front of them without kind of maybe human sense checking it. Well, I mean, it's too easy for the computer to say no. So, they may ignore that there's a stable cash flow or contract-based income, the growth trends. And I think that really limits, what is out there for the client ultimately. And this is where specialist lenders come into it, and we work very closely with Together. And I always feel that the great thing is whenever we give those options, it will always be like the first step for that person to kind of move on to bigger and better things. So by doing that, it gives you flexibility. We're very lucky here at Brightstar. We will have lenders will send BDMs and underwriters and work from our office on a rotational basis. So going back to that human sense checking it, we can actually talk about these things and say, does this deal make sense? Because I think by being too rigid, there's too many people out there not getting the solutions that they need. Talking about things that we've said in previous video about if you have to say no, give me a call, is we will have exclusives or semi-exclusive deals with lenders like Together where we can actually help someone where a broker will think, oh, normally that's a shut door.
Of course. And actually, Nick, Andrew has already named Together as one of the lenders that are open, but just tell me a little bit more about what ways Together tries to address these overlooked areas when it comes to self-employed borrowers.
Underwriters really need to sort of understand the makeup of a self-employed customer and their business and really get under the skin of what's happening, whether it be understanding the cash flow, whether it be understanding how the business is structured, where the business comes from. Actually, how does it generate its income? We sort of look at it from a point of view of, is it plausible what a self-employed person is doing and how they're operating their business, and is it sustainable? And one of the ways in which we'll sort of look at that is through not just looking at the past and looking at the history of their accounts and is it 3 years accounts, whatever it might be, but we have the flex to be able to actually understand what's going ahead and looking ahead and actually taking, for example, projected income and projecting earnings into account and using those in our affordability assessment to determine whether what we can actually lend to customers. So I'm not saying we're completely unique in that, but it's certainly, something that's very more sort of like within the specialist lending arena, because high street lenders, high street underwriters, they don't have the time to ask these kind of questions and to sort of sit there and analyze accounts to this kind of degree. And one of the things that we're quite reliant on is, rather than sort of getting accounts or SA 302s and getting into those kind of details, we're quite happy with an accountant certificate that really sets out the position of the business, what's going on, but helps the accountant to be able to rationalize things that are going on, talk about certain things that may be going on with the business or how it's looking going forward, that really lend themselves favorably to underwriters.
And Rachel, I mean, before the customer even gets to that point where they've dealt with a specialist like Together, I mean, research just show that a fifth of self-employed borrowers believe their applications are rejected because of their employment status, and 80% said they struggle to prove their income. So, what can advisors do to present these borrowers in the best way and reassure them that options such as Together are available?
Absolutely. So first off, I think the broker needs to take a step back and actually really get to know their client and understand how their income's actually being generated. They need to understand how to actually themselves read SA 32s, read accounts, understand what's been going on historically and what's going on forward. Because that's the thing, we can't go to a lender like Together or bring in our partners like Andrew until we actually know what's going on in their circumstances and what's maybe caused there to be an issue. It also takes it back a little bit further on that point is, actually, when do we speak to our customers? Sometimes we need to speak to our clients, especially self-employed clients, before they're ready to buy right now. we need to be working with them probably for some period of time between them buying properties or remortgaging properties and understand what's going on. So from a broker's point of view, I would say, one, make sure they're comfortable and confident in understanding what the client's telling them and reading the documentation, and then know your lenders. And don't be scared to ask for help. Speak to lenders you've maybe not spoken to before. If you've not worked with someone like together before, speak to them and ask them what they're doing. I love the fact that they use accountants, projections, and certificates, because guess what? That makes our job so much more easier to read them too. Because accountants actually won't put their name to something unless it's accurate. On the point regarding the clients not being able to prove their income, I think this is where things like what Together Do is really innovative, because it gives that client the ability for their accountant to explain what's been going on. Have they done a growth in their company? Have they been expanding, therefore profits have been down because they've been reinvesting in the business? Or have they just renewed a contract that's going to improve their income? Understanding all that. And when we sit down and speak to an employed person, we ask them regarding their bonuses, commissions, how they've been employed, and so on. Why is it the self-employed? We revert just to asking them for documents. Well, can you provide your last 2 years SA 302s? No. Have the conversation. When did you set up? What's the whole point of your business? What are you looking to do? How are you going to grow it? Is the people involved in that business? And do they have other businesses? Because guess what? A lot of self-employed people therefore have 2, 3, 4 businesses that aren't just their main business. Really understand your client.
And actually, that brings me on to Nick. So, what can lenders do to help advisors close any knowledge gaps that they might have when it comes to self-employed borrowers?
Yeah, I mean, if I look at the knowledge gap that brokers have, it does vary across the scale. You know, you've got those sort of experts that exist that really understand because they've targeted their model, their market around self-employed people. That's their sort of day in and day out. But then you've got your more GP practitioners, your general sort of mortgage broker practitioners that perhaps sort of come across 85% of what they do is within the employed fraternity. So 15% sort of sits within that self-employed area. And their knowledge is a little bit sort of more sort of sketchy, more gappy around it. And I think that's a lot to do with lenders' fault. And I do blame lenders. You know, we have to take some of the responsibility for this. If you look at lending criteria, you've got some lenders that want salary and divs. You've got some that want latest year's net profit, some net profit before tax, some net profit after tax. Some want to understand sort of like your drawings as well and retain profit and things like this. And I think that it's become so muddy in terms of what it is that lenders are looking for to be able to demonstrate and prove affordability that I think brokers don't really understand what it is that they need to be able to present to a lender. And something that MAB are doing is around sort of bite-sized chunks. So doing more and more kind of hit sessions around, right, okay, understanding accounts can actually be quite a chunky topic in itself. So let's pinpoint a particular aspect of that accounts and then just focus on that and just do a 5-minute hit session on raising awareness and raising understanding of that specific point that then builds up into a series that's really comprehensive to help brokers understand accounts. You know, I think there are far too many instances where and I don't want to pigeonhole brokers because that would be really unfair. But there are brokers out there that will say to you, you know, this is a great customer. His turnover is £1 million. Amazing. But that's not how he's going to pay the mortgage. You know, we talk about self-employed and the need for us from a mortgage perspective. But actually, going to Rachel's point, if you really understand the business and the needs that they've got, their aspirations to grow, those type of things, hey, do you know what? One of the immediate needs could be that they need borrowing that isn't a first charge mortgage. And that could actually be, for example, a homeowner's business loan, all about being able to raise money against their residential property to be able to help them invest more in their own business. And do you know what? If you ask those kind of questions and you're able to sort of like capture that and understand the aspirations of the business and where there's an opportunity, and do you know what? You've ring-fenced that customer and you've defended against a business bank or somebody else like that taking that opportunity away from you.
And actually, Andrew, would you like to expand a little bit more about what packages are doing to support brokers when it comes to dealing with these cases so they can then help their clients?
Yeah, it's nice to see that great minds think alike. You know, Nick's mentioned with MAB doing the hit sessions, you know, for that little bit of education. Once again, going back to that education word, we provide similar here at Brightstar. So whenever I speak to new brokers to introduce them to specialist lending, try to introduce the different opportunities in each different areas, But that's just scratching the surface, really. So we can provide and do provide focus sessions. So it would purely be, kind of a Teams meeting with one of our consultants here. It'd be 15, 20 minutes. It'd be a case of what they're seeing in the market at the moment, how that opportunity came around, and also maybe a case study. We need to be working with brokers, like our brokers from MAB. We need to be working with lenders, like together, who are flexible. It's kind of having an understanding to say, do you know what? There could be a solution here. And this is why I really like our relationship with all our lenders, that we can sit down, talk about it and say, look, this does actually make sense. If people think of specialist lending, first thing they think of is adverse. And it's not always adverse. It will be the client's background. It may be they're self-employed. It may be they're on a visa. They may be an expat. So it may be the property type. The actual asset. Non-standard construction. Or my favourite story, which I've told Nick and probably Rachel before, about having an inquiry about a human grave on the grounds. As a broker 15 years didn't know what to do with it. I speak to our residential team, and they tell me, funny enough, it was with Together actually, this was the LTV and this is the percentage, 60 seconds, and I think the more I'm always busy, no matter how many applications or completions we're doing, because I'm always talking to new brokers saying, look, this is how we can assist you. We can help you. And there's always somebody at the end of the line for you.
Thank you very much. And thank you for giving some colour to that discussion. But that is all that we have time for. So I hope everyone watching found it interesting. And this conversation will continue. So please join us for the next part. Goodbye.